In my view, clearly this was not supportive of keeping rupee anchored, and the domestic rates market also in line with the inflation outlook. So clearly, the central bank feels that inflation upside risks do not exist presently, and hence they are willing to wait it out.
The RBI is more focused on protecting the financial system and on making sure the NBFCs and the CP market has enough liquidity than obsessing about inflation or the rupee. I think it's the right thing to do. The RBI has got its priorities right, but yes, it does put the rupee on an even weaker footing, and it does mean that the currency has got further to go in the coming months, even if oil stays at the current level.
The fact that they didn't raise the policy rate is in line with their own current inflation projections having kind of come down, which probably the only reason I can think of is that it's too early to kind of judge the rupee and the behavior of the rupee over the next 6 months, and therefore the impact on inflation that may have. Within that, I think it's consistent.
We were anticipating that there could be an upside risk to the 5% inflation forecast that RBI had put out for the first quarter of the next fiscal year. We had seen a 25 basis point upside risk. Clearly, that is not to be. The stance has been changed to calibrated tightening. I think October and November, as I was saying, were the most difficult months to come by, and that's the time a lot of global issues will play out in terms of midterm elections in the US. You will have OPEC meeting in November. But having said, a 25 basis point rate hike today perhaps could have calmed the markets a little bit. Rupee would not have been in a hurry to breach the 74.